celebrating 15 years of Young Turks.
Hello and welcome to this special edition of Young Turks, where we put the spotlight quite literally on India's angels. The Indian Angel Network was established in 2008 and since then has grown to become the world's largest angel investment group with over 400 investors investing in 10 countries. Over the years, IAN has been able to table a return on investment of 40%, and today they're announcing the launch of their maiden fund, a first for an angel network in the country. Pegged at a whopping 450 crores, the fund is looking to invest in 150 deals across sectors, geographies and stages. Joining us on the show today, the founder members of the Indian Angel Network, Saurabh, Srivastava, serial entrepreneur and co-founder of NASSCOM, Chairman of NASSCOM, Raman, and IAN President Padmaja Ruparel. Appreciate you joining us here and congratulations on getting this done. Let me start by asking you, Saurabh, how easy or difficult was it to actually put this fund together? Because, you know, if you look at any of the data at this point in time, and I'm just looking at VC Circle, and they've put out their angel and seed investment data, fell both in volume and value terms, with deal volumes reduced to half, with 120 deals in Q1 of calendar year 2017. The picture didn't look particularly bright in 2016 either. In that context, how hard was it for you to do this?
You know, Shireen, not hard at all. We have seen no drops. 9,000 entrepreneurs see us every year. We are doing an investment every 12 days. We can't see how much faster can we travel. So we're seeing no drop. There is a drop in sentiment, for sure, because when you have the large internet companies like Snapdeal and many of the others struggling, it spills down across the board. But see, at IAN, we're not restricted to one sector. We're in 17 sectors.
Yeah.
India has massive growth opportunities in lots of areas, not just in pure tech. And there's no dearth of entrepreneurs coming in at the seed level. So when we said we'll do the fund, the idea was we'll leverage what we've built as an IAN platform. We were doing 40 deals a month. Next 4 or 5 years, we'll do, I don't know, 150, 60 deals. And we're investing 3-4 crores in a deal. We said, why don't we do the fund? The fund will come and co-invest with IAN early on. They'll need more money.
Okay.
That's where money is getting scarce. So the fund will invest in the next round. It'll bring in other venture funds as partners to say, look, come invest with us.
Okay.
So we won't compete, we'll collaborate. The company will need 3 crores in the initial angel round, 30 in the next, where we'll be there. It may need 60, but now we have other VC partners who are also there. So we extend the runway. And the beauty of it, and why we're so excited, is we're doing 450 crores. IAN fund in the next 4 years will do about 600. That's 1,000.
1,000, yeah.
Another 450 will bring in from the partners who will co-invest with us. 1,500 crores in 4 years. In a 10-year period, we'll do 3,000-4,000 crores. And really transform the ecosystem, because we would do not 15-20 companies like funds do. We'll do 150, 160 in 4 years.
Okay.
In 10 years, we would have done 500 companies, 40,000 crores. It'll transform the landscape. I mean, that's what's exciting us, to be honest.
What looks exciting today? If we're talking about the kind of irrational exuberance that took up the e-commerce companies and that now being cleansed out of the system, what looks exciting to you at this point?
See, yeah, there is that bit of exuberance that you speak about. But our basic strength is this 400 professionals who are sitting there, people who've been entrepreneurs before, people who built companies from nothing. And therefore they have the understanding, and it is across sectors, these 17 sectors that we speak about. So when an entrepreneur jumps into something, he or she understands that there is the need for some guidance, for some help, mentorship perhaps, a term that we can use. That is the strength of the Indian Angel Network. And with the fund, we are putting this strength, if I may call it, on steroids. Because that's
not necessarily a good thing, by the way.
Well, in terms of not giving steroids, but having it behave like on steroids.
I'm not sure that's entirely a good thing either.
Because for a startup to be able to get that capability, to get that market knowledge, to get that understanding.
But hasn't that been the problem that the Indian startup ecosystem over the last few years has actually been on steroids, which has led to the problem that we're faced with today?
No, the steroids are devoid of knowledge. They are only steroids of money power. With this fund and with India Angel Network, we hope to bring in that gap in understanding, that gap of experience and expertise.
Okay, so Padmaja, the gap of experience and expertise is what you hope to fill, and of course, money goes with it. Over 10 years, a couple of thousand crores, as Saurabh has just pointed out. But what exactly are you going to be looking for through this fund now, and how is the investment strategy likely to be any different? The ticket size perhaps higher, you go anywhere between 6 crores to 25 crores, I'm given to understand. Take me through what the investment philosophy is going to be.
Yeah, we started IAN, the gap was the angel funding, the first 2 crores, 3 crores. That fortunately has moved. Angel investing has become center stage. You know, a lot of what you guys have done, this has become an established asset class in HNI portfolio. The new gap that we are seeing is that after they've raised their $500,000, they're not being able to raise their 1 to 4 million, which is where very good companies are falling off the cliff, or you know, they're much slower in their growth rate than they could be.
So that's the gap.
That's the gap that the fund is trying to fill.
Okay.
And it's the pre-Series A. And this is creating a very triple win strategy, if I may just take a minute on that. Number one, the companies that are performing, they are able to get, this is being done with co-investments. So here, as the fund goes and invests and says, okay, we'll invest 3 million, we would also invite sectoral VCs who are specialists to co-invest with us. So this creates for the company, for the fund, as well as for the strategic or VC fund, a very triple win strategy between themselves.
So just to take that triple win strategy forward, what's the kind of interest that you've seen coming in from the partner VCs that you hope to co-opt?
Huge, because in fact at the moment, almost all of our companies that have done well, we worked with one or the other of these leading VCs to work with them. So they're excited because they don't see us as competition. They see us in some ways at the epicenter. We're sort of growing all these hundreds of startups. We're able to make them sprout and come up to a point. And now when the time comes, it's deal flow for them. And if we are saying we'll make an investment, and we've been in that company from the beginning,
it gives them the confidence.
Well, because, you know, they'll come and do a 2 or 3 months due diligence. We've been there 18 months. So if we're willing to put our money and say to them, listen, come invest with us, and hey, you can determine the valuation, and we'll invest behind that. It gives them huge confidence. So it's working very well. And I just wanted to address one point which you said, the thing on steroids. You know, the thing that happened, a lot of people got excited about being entrepreneurs, and that's actually a very good thing. Because it wasn't the case 10 years ago. But a lot of entrepreneurs have tried to just mimic what is happening in the West. They've taken a model, tried to solve a model which for India is just addressing 0.5% of the population. In the US, it may have been addressing 50% of the population. So naturally, A, the market isn't the same, and B, they still want to value themselves the way they valued in the US. Which isn't appropriate.
But whose fault is that? Let's not blame just the entrepreneurs.
Not the entrepreneurs.
Let's also blame the investing community.
No. This is completely the fault of the investing community. Because I think they should have guided, which is what we do. So they should have guided entrepreneurs to say, listen, if you're just going to do a model that somebody's done in the US over here, and if you succeed, sooner or later, they'll come here. And if you have no innovation, nothing different, how will you fight? You're seeing that today. Snapdeal, Flipkart, and Amazon. Ola and Uber. But if you look at India, we have massive challenges and therefore massive opportunities.
Well, time for us to take a break, but when we return on this special Young Turks conversation, we'll take you through what the Indian Angels Network intends to spend its money on. That and more when we get back.
Celebrating 15 years of Young Turks.
आपका रोहन तो वाकई चैंपियन है, नेशनल्स खेलेगा एक दिन।
मैं तो इंटरनेशनल सोच रहा था।
क्या बात है, वर्ल्ड कप खेलोगे? शाबाश। हाँ भूमि बेटा, तुम बड़ी होकर क्या करोगी?
मैं तो जज बनूंगी, सुप्रीम कोर्ट की जज।
इंडिया का फ्यूचर वाकई ब्राइट है।
अपने बच्चों के सपनों में आज ही से निवेश करें।
नई उम्मीद का
जब साथ मिले रास्ते आसान हो चले ख्वाहिशों को पंख लगा के आसमां में ये उड़ चले ये उड़ चले बादलों के संग
महिंद्रा म्यूचुअल फंड बाल विकास योजना
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Gentlemen, if you want to beat the Indians, you have to think like Indians, eat like Indians, and if it has to be, dance like Indians.
Coach, shouldn't we also fly like Indians?
Absolutely.
Namaste.
Non-stop you. Lufthansa.
The ISC FICCI Sanitation Awards aims at recognizing the efforts of all stakeholders. The conclave will be a brainstorming platform to facilitate multi-stakeholder engagement towards sustainable sanitation. ISC FICCI Sanitation Awards and India Sanitation Conclave.
इंडिया तो रोज बनेगा और रोज धूल भी उड़ेगी, इसलिए
बर्जर एंटी डस्ट पेंट, डस्ट गार्ड टेक्नोलॉजी जो धूल को दीवारों पे टिकने ही ना दे।
धूल आए पर घर पे ना टिक पाए।
This week, NSE Finwiz visits the headquarters of PepsiCo India in Gurugram to address the significance of financial planning and wealth management to its employees. Watch NSE Finwiz at these times only on CNBC TV 18.
Presented by National Stock Exchange.
Lloyd Wi-Fi ACs are here. So, think hi-fi, go Wi-Fi. अरे भाई जाइए चेकआउट कीजिए Wi-Fi.
The problem is that if we destroy the life supporting systems, there will be nothing left on the planet. We are not saying that there shouldn't be development, but it should be matched with the ecological balance. So basically this is the hybrids idea of ecological balance with industrial development.
Fittings make your furniture work beautifully. German quality you can trust. Celebrating 15 years of Young Turks.
Welcome back. You're watching this Young Turks special, and we're in conversation with Raman, Padmaja Ruparel and Saurabh Srivastava talking about the new Indian Angel Network Fund.
The whole entrepreneurial ecosystem in India is just getting started. When people say, you know, is it burst, it's sort of coming apart.
Yeah.
It's just getting started. We have the opportunity, and what one would like to do is to see some of the greatest companies in India emerge from this table. And to do this, what we're trying to create is, let's say, the single largest home in India, where we can say, listen, you can walk in when you need 50 lakhs, and so long as you're doing well, you can stay here till you need 50 crores. We'll handhold you, we'll get you ready for the world before you ship out.
Okay.
And if this model works, and if we make a huge success of it, as we hope we do, then a lot of other angel groups and funds will do this. And yes, they'll compete with us, but in this country, that should not be an issue. But what it will do is if we can put 3,000-4,000 crores at play in 10 years, which we intend to, and 3 other angel groups do that, we'll write the inverted pyramid. I mean, if you look at the US, in a typical year, VCs put $25 billion in 5,000 companies. Angels put $26 billion in 50,000 companies. 1 in 10 survives, needs 10 times the money. They have this pyramid. We have this pyramid. What we're trying to do is fix it.
So, just in terms of being able to raise the funds, has a significant amount of money also come in from family offices, etc.?
Yes, it has. We've got institutional money and family offices and a lot of members of IAN. And it's the kind of money we want. We want people who will also add some value, not just write a check. We've got very good quality money. And
overseas contribution?
yes, but the best part is that we've done a first close largely on domestic. And everybody says you can't raise money domestically in India. 85% of VC money in India comes from overseas.
Overseas, yeah.
And we've done our close, which is half the fund, on domestic. Now we go raise most of the institutional money overseas. We have some, but now we raise it overseas.
Perhaps we could also take some lessons from the experience that you may have had with Stayzilla. And we've seen that unfortunate incident play out. Padmaja, what has been the key learning there as far as the Stayzilla story is concerned? And do you fear that we're going to see a lot more of this? Because we're already seeing cases being filed against companies and entrepreneurs for not being able to pay dues and so on and so forth.
So, you know, one of the learnings, there were two learnings actually. One learning is really from an entrepreneur perspective, right? How fast should you grow? Because, you know, initial days, every company, every startup is bootstrapped, and therefore you build some disciplines of bootstrapping, capital efficiency, how you spend, all of that. And it's very easy at times to, when you raise the next round, when you raise larger sums, to say, okay, why don't we do this and this and this, because it will help us grow. So I think that growth path, how fast you grow, how you spend, is very important. And I think losing sight of that is not really going to help in the long run. That's one. The second is from the ecosystem perspective itself, which probably is, this to my mind was a civil case, and as an ecosystem, as a country, as our judicial process, I think it's very important to differentiate between civil and criminal. And I'm not referring to Stayzilla itself. It may have its own, you know, its own unique case, which I'm not very aware of. But I think if it's a civil case, then it has to go through the, you know, the process of law, that it's a civil process of law.
I'm an investor in Stayzilla. I mean, I can burst into tears and say, look, there went my money. So we offer to some of the Indian Angel Network investors a part divestiture at a double digit in terms of number of times that their investment multiplied. And the founder spoke to me and said I should stay on, so I divested half of it. But what happened there, the new investor coming in had a GMV focus, made the management move to the GMV focus, and the management since then gave a statement to say, I forgot to look at my cash flows, I forgot to look at... There were IAN representatives on the board who were bringing out that different focus. So I think there is one aspect of big learning to, you know, ultimately the entrepreneur will decide. We may sit on the board and we may disagree or we may have views. To be able to present a viewpoint so that educated decision can be taken.
So Stayzilla is a pity, I'll tell you, because this is a company that should have done very well.
Yogi was so
It was doing very well.
It
It had a great entrepreneur. We loved the company. And but this is a company that should have done well. It would have been good for the country, the space they were in.
Was it just ahead of the curve?
They were slightly ahead of the curve, but they got pushed by the investors. They were pushed too far ahead of the curve. And the thing is, when you're growing, it's fine. You can make losses and they can be planned. But you mustn't lose sight of your unit economics. You must know how you will make money. And the second thing is, you know, even in the US, everywhere in the world, 9 out of 10 startups will fail. And if all of them are going to end up in jail, there'll be no startup ecosystem in the world. So we have to fix that. One is a law issue, Chapter 11 type thing, make it easy. The second is implementation. I mean, the judicial system should not accept what they did, the Stayzilla case. You have chit fund scam guys who are out roaming on bail, and this poor fellow, and they have thousands of crores, this poor fellow's on a civil case is in jail. So it's a judicial system is also at fault.
Also to the entrepreneur community, I think the last couple of years have brought down to say that I need to look at what my business model is a little more granular. And if you look at it, you know, as Saurabh said, we meet about 9,000 companies. I see a marked change in which way people are bringing out their business model, the way they are able to answer the questions, because they've given it far more diligence to that piece.
The thing that has also happened, which has worked out good for the ecosystem, is companies have now started looking at their governance, their internal audits, their statutory discipline.
Absolutely.
And that's very good because
that's the
that
sign
is
of the market
maturing.
Yeah.
Initially, we would say that when we had a workshop on UI, UX, we'd have more people. Now, we have more people coming when we're talking about GST, when we're talking of audits, when we're talking about setting up company structure. So there has been that slight shift, which is very good.
Sure. So let me get wrap-up comments. Raman, let me start by asking you, what is it that you would like to achieve with the fund? Give me a sense of what is going to be the outlook over the next few years with the fund.
I think some companies that had a potential to become winners faced a high mortality because Series A was not available or pre-Series A was not available. And a lot of the angels saw the potential because everything was pointing in the right direction. But the inability to raise that fund, we hope to be able to bridge that gap, the pre-Series A or Series A gap, that allows the companies to come to their level of maturity.
Padmaja, aspiration for the fund over the next few years?
So, I think what I would like this to become is really become a paradigm shift in the startup ecosystem, become the largest horizontal platform for seed and early stage investing. We've seen 40% IRR or above in IEN, and I think apart from creating the companies, good companies that Raman spoke about, I think I would be really, really delighted if we can return excellent money returns to the investors. I think then we would have created in some ways India as the place for early stage investing. That's what I would like to see.
This is also a show about getting entrepreneurs who are watching to say, well, you know, these guys are sitting here, they've been able to achieve what they've been able to achieve in life, and maybe you can share some lessons with them. What's the big mistake that you made? If you could go back in time and do it over, what would it be?
So I'll tell you the first thing. When I did my first startup, I was running the Tata Unisys JV, which at that time was 1/3 of the Indian software industry. 11 overseas offices, operating in 40 countries. I thought I knew everything. What
Did
was
you
there to
realize
learn?
you didn't?
Then I did the startup. In 1 year, I understood all that I didn't know. So, big learning session. The second big mistake, we said in the first year everybody makes a loss. So we didn't hurry too much with our permissions for tax exemption and all the rest. We made a profit. But because we didn't understand the difference between cash flow and profit and loss, we didn't hire a CFO. Me and my partner said, you know, what's a big deal? Very few transactions. Why spend the money? We made a profit. We had to pay taxes. But we didn't have the cash to pay taxes. Because we'd spent.
So hire a CFO.
So don't scrimp on hiring the best professionals in every discipline. Don't think you know everything. In fact, the big learning, if I get an entrepreneur who says he knows everything or she knows everything, doesn't need anybody else, doesn't matter if I think they have the next thing after sliced bread, I'm not going to touch them.
Okay. Well, I wish you the very best of luck with the new fund, and thank you very much for sharing the Indian Angel Network story with us. And we hope that I can maybe find a home as well, Leene, that you're offering to entrepreneurs on the table here. But thanks very much, Saurabh, Padmaja, and Raman Roy for joining us here on this Young Turks special. For now, from all of us here, goodbye. Many thanks for watching. But stay tuned to CNBC TV 18. We've got a lot more coming up.
Celebrating 15 years of Young Turks.